All right, let's check in on our trade that we put in on MT5 at the beginning of the course. As you can see, we're just under $3,000 in profit down here. We entered a sale position, a short, with 10 lots. So we entered a short position up here, and price went down. So what do we call that? We call that a bearish move, a bear move. It went down. It was a short, so we expected it to go down. And so we took the short, or we took the sell down, and it went down about 60 pips in profit, which took us up to about $6,000. Now, price is retracing back to the entry. So we're coming up, and now we're about 30 pips away from the entry, from our original entry point. And so now our profit is around 3,000. Now remember, we have 10 lots. That's $100 per pip. We're 30 pips away from our original entry now. So we have around $3,000. So in this video, what we're going to do is we're going to see how can we determine the trend, whether price is going up or down, and so we can predict where price is going. So let's jump over to the video and let's talk about it. So for charting, like I said, it records history by looking left. And looking left into history, it helps you predict where the price is going next. That's why charting is so important, so that we know where price is going by looking at where it's been. Now, I'm going to simplify this down because charting is really a simple concept that you already know how to do, but I'm going to break this down on how to do it for yourself and how you're going to make a lot of money just by doing simple things. Charting, the charts can only move in 3 directions. It can move up, down, and sideways. That's the only direction that charts will move. Up, down, and sideways. And so when it moves up, it starts at a low, and you'll see it go to a high. We call that a long or a buy. So that's called an uptrend. When it goes down, it starts high and it goes low. We call that a short or a sell. And then there's this thing called consolidation or ranging, where it just moves sideways. Now, this is important to note that when it moves up, it doesn't just move up in a straight line. When it moves down, it just doesn't move down in a straight line. And when it moves sideways, it doesn't move sideways in a straight line. But what it does is it moves up and then it retraces. So the bulls and the bears in the uptrend, the bulls are in control. And the bulls are racing to the upside, and then the bulls lose a little steam. It's like running a race. The bulls run, and then the bulls get tired, and the bears take over and get strong, and they retrace until the bulls gain strength again. So the bulls run, the bears get in control for a little bit, and then the bulls get strength again and run. Then the bears take over, and you'll see that push up, and then a retracement, and then a push up, and then a retracement. And that's how price moves up. On a downtrend, it's the same thing. Bears are in control. So you'll see the bears come into the market and push price down. They get exhausted, and the bulls start pushing price up, and then the bears get strength again and push price down. And so you'll see it move in that direction. In a consolidated market, there isn't a clear winner. We don't know if the bulls are winning or the bears, and so they move in a range where there isn't a new high created and there isn't a new low created. It just moves sideways, and it's just a fight, and nobody's winning. So it's hard to predict who's going to win until it breaks out of this consolidation. So retracement is the other name for it is pullback. And so when this is the move in the uptrend, this is the move, the up move here, and then it hits a peak. And when it hits that peak, it will pull back, sort of like a bow and arrow. You pull the bow back, and then it releases and shoots off in the direction that it intended to go. So that is the retracement. And usually that retracement, we mark it by percentage. Does it retrace 23% or 38.2% of this full retracement, or maybe 50% of that full retracement, or maybe 61.8% of that retracement, or even 100%, or even sometimes 120% can be the retracement, and then it goes into that direction. So up, down, sideways, the three ways the market moves. And so when we jump over to a chart, I'm gonna show you what this looks like. I just pulled up a random chart the other day and looked at it. And so what you'll see is, and we'll explain what all this means, but what you'll see is periods of where you'll see up, down, sideways. So over here to the far left, you see price pushing up. That's the uptrend. And then that trend stops and it goes sideways. So you see the sideways movement. And then the bulls get control again and it starts to push up again in the uptrend. Then it moves sideways. And then we see this downtrend starts to come in. There's a downtrend there. And then it pushes up again, moves sideways. Then we go into an uptrend. Gets on the top of the uptrend. Now we're currently in a downtrend where price is pushing down. All right. And so that's that up, down, sideways movement where price is always going to move. It's just a matter of which direction it's moving in, up, down, or sideways. All right, so we're going to learn a little bit more about this, but let's go to the next slide and talk about the characteristics of the uptrend. So the bulls are in control in uptrend markets. What you will see is price push up and hit a peak. And depending on what it's coming out of, we don't know what is coming out of here, but we know that there's a high. And that's a peak. And then price begins to retrace and it pulls back and it creates a low, right? And so let's just say that we don't know what was over here before. So let's just call this a low. In lieu of calling it a low or high, we're just going to call this a low. We have a high and then we have a low. So this next action is very important. What happens with price is from high to low is that price pushes up and becomes equal to the last high, but not only equal to the last high, it breaks the last high and goes higher. And that's the first indication that we're in an uptrend. That's the first indication that we're in the uptrend, and that because we've broken the last high and went higher. So now we call this a higher high. And a higher high is synonymous with uptrends. But then the bulls get tired and the bears take over and it starts to retrace. So price action goes back down. And when it goes back down, it hits a low. But this is another important point, that the low that's created didn't go lower than the last low. And so that's the other sign that we're still in an uptrend and structure hasn't been broken, because we didn't go lower than the last low. So we call that a lower high. And that continues. So we get a higher high, a lower high, a higher high, lower high. And that continues. And those peaks, the higher high is a peak and a lower high is a peak. Those peaks are continuing in the uptrend. All right, so visually, just look at this, absorb this picture, because this is very important, and it's called market structure. Market structure is intact. It's producing higher highs, and it's producing higher lows or lower highs. And when you can stretch, because it's an uptrend, you normally can stretch a trend line on the bottom of an uptrend. And the trend line will predict where price is going. So when price pushes up, it retraces to the trend line. Then it pushes up again, and it retraces to the trend line. Then it pushes up again, and it retraces to the trend line. So if I didn't see any of this, and I just took this trend line and stretched it into the future, what I could predict is that if this is going to retrace, it's probably going to retrace to the trend line. All right, that's the basis of market structure. Now let's look at this in reverse. If it was a downtrend, it would start off with the high and it would produce a low. And then, so that bears are in control, they get tired, and then price pushes up and creates a high. But the high is lower than the last high. That's the first indication that we're entering into a bear market, that it's not producing higher highs, it's producing lower highs. So now we have a lower high. The second indication is that price pushes down and goes lower than the last low that was put in. What that tells us is that we're producing a lower low, and a lower high and a lower low is the characteristics of the downtrend. So that's going to continue. Lower high, lower low, lower high, lower low, lower high, lower low. And if you put a trend line now on the top, where the uptrend, it was bouncing off of the bottom because it was climbing up, on a downtrend, the pressure is coming from the top. There's pressure pushing price further down. In an uptrend, there's pressure pushing price up. In the downtrend, there's pressure pushing it down. And so when price creates the low, it goes up, and there's pressure that it will meet on the trend and push it back down. Then it'll go up, push it back down. So if you don't know if it's if you're in a downtrend, if you can stretch this into the future, once it starts coming back up, you can predict that it's going to come to the trend line, and if it rejects off the trend line, it's going back down. All right, and now let's look at the consolidated market or the ranging market. The ranging market doesn't create the high or a new low. It moves sideways. So we call this a range. Here's the top of the range, and there's a bottom of the range. And price bounces between this range. Those are the three scenarios that you're going to see on a chart. You're going to see that uptrend, downtrend, and sideways trend. All right. That's going to be foundational. Regardless of how many special things that you learn over the next 10 years, you're always going to come back to this as your foundation, because market structure is the basis of trading. Where is price at in relation to structure? And so if you identify that price is in a range and price is right here, you're going to wait for it to hit this point or the top or bottom. If you're in a downtrend and price is in the middle, you're going to wait till it's either at the lower peak or the top peak. If you're in an uptrend and price is in the middle, you're going to wait for it to hit up the top peak or the bottom peak. Why? Because in the middle, you don't know which way it's going to go. But at the peak, you have a very good chance of knowing where it's going to go.
All right, so we covered a lot with the three ways that the market moves: up, down, and sideways. Let's jump over to our MT5. We're looking at our Euro USD trade that we did at the beginning of the class, of the training. We have 10 lots, and we see that we've moved about 29 pips. We're about 29 pips away from our original entry. We're right around $3,000. But question for you, is the market moving up, down, or sideways? So let's jump over to TradingView to see what this trade is currently doing and see if we can make sense of it. So I'm going to open up TradingView. I'm going to go to Euro USD here, and here's the chart. So currently I'm on the hour. What I want you to do is I want you to take the chart and turn it into a month chart, a month. And so right now on the left-hand side, there's a bunch of tools that we can use. I'm going to grab the paintbrush, but there's a lot of different tools that you can use to mark up your chart. I'm just going to grab a brush just so I can highlight a few things. So right now, this is current price action on the day. And we can see that we have that price has is going in this direction. So let's just trace this out. If and let me use a different color just so that it makes sense to you. And I'm going to grab a different toolbar. I'm going to grab the path tool. And so usually that opens up a toolbar up here. If you click that toolbar, or maybe not, let me star that. Yeah, there we go. I'm trying to get it to act right, but that's fine. We may not be able to do that on the free version. In my version, we can color code it. But I'm just going to do a path here of where price is right now. So price is right here. And where did it come from? So I'm just going to map out where price is coming from. So I'm just clicking on the highs and the lows. All right, so now I'm going to go back to my brush tool. All right, so now we can see that we started off from this high up here. And then we went to create this low. And then we created a new high here. So we created this new high. This high is lower than this high. So we call that a lower high. Then we have a new low. This low is lower than this low. So that's a lower low. Then we have a lower high. We're not going to count this one, but we have a lower high, and then we have a lower low. Then we have a lower high, and then let's skip over that one. We have a double top, so it's a lower high. Now we have a lower low. All right, and so you can see that this is a downtrend that we're currently in, that we're producing lower lows and lower highs. Lower lows, lower high, lower low, lower high, lower low, lower high. And so that is trending down. Price is currently right here, and it looks like we just put in what? A new lower high. So what's the next thing that we should do? We should probably put in a new lower low somewhere lower than this low. So the prediction just based off of a downtrend is that price should go and create the new lower low and then a new lower high. Let me scoot this over for you. All right, so it creates a new lower low, and then it'll create a new lower high, then it should create a new lower low. So we can predict where price is going just by identifying the trend on this. I want you to go through these, and this is on a monthly. You can do this on the daily. So let me do that really quick for you. And I don't want this video to be too long, but I want to make sure you have it. Let's go down to the hour. And so the hour, we can see that we have a different trend, that the current hour is moving up. And so we have a low here. Let's just start here. And then we have a high. And then we have a low. And now we have a new high. Then we have a new low. So that looks like an uptrend on the hour time frame, where we're going up, down, up, and now we're currently down. And now we're going up. So we got to see what this one does. But if this one breaks the highs, that would give us a new high. And then what would it do? It would create a higher low in an uptrend. So uptrends are a higher high, higher low, higher high, higher low, higher high, higher low. So that's a way that we can predict where price is going. Now, let's say that currently, if price, where it's currently at, if it doesn't create the higher high, so this was the higher high, let's say it stays below that, and let's say that this is the new high. So what does that mean for us? Well, now it's creating a lower high. So that means that the trend, it may be reversing, where it will create a lower low here, and then create a lower high here, and then a lower low. All right, so I want you to practice that. Go through TradingView and just practice identifying the chart. I want you to identify higher highs and higher lows in a bullish market when the market's going up. Then I want you to identify lower highs and lower lows in a bearish market when the market's going down. And then also identify consolidation when the market is just moving sideways. Let's see if we can find a sideways market. Here, let me go to a 4 hour so we can zoom out. So you can see that this is a down market. You can see that the current leg is up. But let's see if we can find a sideways market. So right here, if you look at this right here, price, oops, it's not really a good line there. Let's see. So price right now is just bouncing in this range. It's just moving sideways. So it's not making any higher highs or higher lows. It breaks out right here, but during this time it just moves sideways. So that's a sign of a sideways market. So that's your homework until the next video. Find uptrends, downtrends, and sideways trends, what that we call consolidation. All right, see you in the next video.